Welcome to the UnTaxables, the podcast where smart entrepreneurs get strategic, stay compliant, and keep more of what they earn. I'm Haylee Kurka, enrolled agent and owner of Noble Tax and Accounting, and I believe that you can spend your money better than the government ever could. Here, we make tax strategy digestible and approachable, building smart, simple systems that save our clients thousands every year. Get smart, get strategic, get untaxable. Well, welcome to episode 1 of the UnTaxables. So glad you're here. So glad to finally actually be launching this podcast after a long time of thinking about doing it and making plans to do it. And here I am, finally sitting down to do it, and just really excited about that. They say done is better than perfect. And so we're giving each other grace in this process and knows that there'll be tweaks and changes along the way. But for now, I'm just so excited to get this information out there and finally be able to share some of the things that I've learned over the years and ways that tax strategy can really make a big impact on your life and your business. So without further ado, I wanted to use this first episode to really kind of just chat through my philosophy as a tax professional and what guides how I approach the tax situation of my clients and what kind of things you can expect from the UnTaxables. So first, by way of introduction, my name is Haylee Kurka. I am an enrolled agent, one of America's tax experts, and I do own a tax and accounting practice, Noble Tax and Accounting, and we serve clients 100% virtually from any U.S. state. So I started my practice back in 2017, and it's been a journey. We have had a great time, and I have absolutely just loved helping clients, particularly small business owners, find ways that they can mitigate and reduce their tax liability. So when I was thinking about kind of this kickoff episode and what I wanted to talk about, I did want to just go back in time a little bit to before I started my business and what kind of were the things that were an impetus for me to do so. And when I was thinking about that, kind of going back down the memory lane of my life and where I was at when I got married to my husband and what we were doing for work and that kind of thing, it really just focused in on a certain experience that I had about a couple years after we got married. So we were still in the first couple years of married life, and both of my husband and I were working as independent contractors for a nonprofit, and we were paid via 1099 as independent contractors and sat down to do our taxes in April the following year and realized that we were going to have about a $10,000 balance due to the IRS. And, as a young couple, we were just kind of getting started out in our life and we didn't make huge amounts of money. And that was a real shocker. I mean, writing that check for $10,000 and sending it off was kind of a big blow to us. I was realizing that that really was a pivotal moment in my life where I started realizing this tax thing is a really big deal and it really has a big impact on, well, now myself and so many people. And I started to really understand the experience that a lot of people have in relation to taxes. And so from that time on, it really was what spurred me to get the education and the knowledge that I have now and that I have been using for helping my clients get their tax balances as low as possible using legal and ethical tax strategies. So I wanted to share that because I want people to understand, like, I know what it's like. I am a small business owner now, and I was a small business owner back then when I wrote that $10,000 check, but I didn't even know. I didn't even actually know I was a business owner, and I didn't know what kinds of things were available to me as a business owner that could have helped reduce that tax balance. So I want you to feel like I'm here for you and I've been in your shoes, and my entire goal is to help you keep more of your hard-earned dollars in your own pockets, okay? So, most of the show is going to focus on tax mitigation strategies and ways that you can legally and ethically reduce your taxes. So, there are a few core beliefs that shape who I am as a person and philosophically shape how we approach tax strategy in my practice and in working with clients and that kind of thing. And you're going to hear these things reiterated on a very ongoing basis throughout this show. I'll kind of dig into those. The first one is that I believe that you can spend your money better than the government ever could. I believe that you are a better steward of your finances that you earned, that you worked for, and that are in your bank account. I believe that you're better at it than the government is. And regardless of where you fall kind of on the political spectrum, most people will agree with that sentiment. And I want to bring it out as a point of emphasis because I believe that you can spend your money better than the government can. That means that I'm also going to help you keep more of your money instead of sending it off to Uncle Sam. So that's a really core belief here at Noble Tax and Accounting and is going to be a huge part of the show of the Untaxables. The other thing is, I believe that profit that is earned honorably is a good thing. I don't believe that it is the yucky, icky, disgusting, villainous thing that Hollywood and the entertainment industry would have us believe. I've seen enough shows and movies to see the business owners or the business guys becoming or being made out to be the villain because they're wealthy. And that in and of itself is not a reason that someone's a villain. So profit and money really just exemplify who you already are as a person. And if you're a bad person who is poor, you're going to be a bad person when you have money as well. And it's just going to be more obvious because you do have wealth. But if you're a good person who likes to be generous and who is wise and has good stewardship qualities, then those things are going to be exemplified when you have more money as well. So, again, profit earned honorably is a good thing. And we're back to I want to keep as much of your profit that you earned in your own pockets instead of sending it off to the government or Uncle Sam, however we want to say that. I also believe that small business is the lifeblood of the American economy. My emphasis has always been mostly on small businesses. I work with plenty of individual clients who do not have any business ventures, but my emphasis and my niche, if you will, is really on small business owners. And I have a special place in my heart for them. I love the entrepreneurial spirit and I love being part of the business community being able to provide the livelihood for our neighbors and the people that work for us. So I just really like to emphasize that. And in my line of work as a tax strategist, there's just so much more strategy and nuances in the code that can be applied to business owners more frequently. So I wanted to bring that up as well. And finally, I believe that your tax situation should be understandable. So I cut the accountancies. We don't need jargon. We don't need fluff. We don't need things that are hard to understand. I just want to boil tax concepts down into a very digestible, understandable manner that you can turn around and apply to your life, to your business, and to your families. This episode, I kind of wanted to give those philosophical points that we're going to be kind of moving forward from. And also, I want to talk to you and share kind of what tax planning is. And we'll talk a little bit about what tax planning is not, but I wanted this to be kind of the foundation as we move forward in this show, and you'll have a better understanding of where I'm coming from and what we're talking about when we say the words tax planning. So, to start, I wanted to say that many, maybe even most tax professionals are focused heavily on compliance. And compliance means putting the right numbers in the right forms at the right time of the year, right? It's filing taxes. It's keeping you in compliance with the IRS, with the state taxing authorities, etc. And compliance is critically important. Don't get me wrong. This is something that has to be done. We live in a system of taxation that every year tax returns have to be filed. And it's not just your federal income tax return that we're talking about. There's payroll tax returns, there's estate tax returns, gift tax returns. There's so many different types of tax returns and so many different entities that have reporting requirements. So compliance is a critical component of what we as tax professionals do. But back to my original statement, many, maybe even most tax professionals kind of stop there at the compliance level and don't go beyond in serving the needs of their clients to a more full degree. And what I mean by that is compliance reports history, right? Compliance reports what already happened. Your story's been written, the year is ended. Let's tell the IRS and other state taxing authorities what happened. Whereas what really the client needs, you as a taxpayer needs, is somebody that's proactive, somebody that's actually thinking about your tax situation ahead of time. So we're talking about let's create your tax situation, let's write your tax story beforehand instead of just reporting what already happened. And that's really a philosophical difference between compliance work and tax planning or advisory work. And where I'm coming from as a tax professional that focuses specifically on tax planning or tax strategy is that proactive, let's plan ahead, let's not just report what happened, let's figure out what we want to happen and live our lives, spend our money, plan our businesses in that manner so that that's the outcome. We're getting the outcome that we're looking for. So tax planning is, again, way more than just saying, oh, this is the amount of your estimated taxes that you're going to pay for this year. This is how much you should pay quarterly and have a nice year. It's more than telling you at the end of the year that, well, you better go buy some equipment in order to get a tax deduction. Like could be a tax planning strategy. Sometimes when I have a new client that comes in and there's not been any planning done for the entire year, sometimes that's the only thing that we can do. That is a legitimate option, but it's not enough. It's not enough, especially for clients who are regular or recurring to your firm or your practice. And so if you've been with somebody and that's the only thing that they can think of that might help save some taxes or mitigate taxes, then I would suggest to you as a tax professional, push back a little bit and say, hey, but what about other things that we could do throughout the year that are going to help reduce taxes instead of just buying equipment? And on that note, I'll just say, and this is I guess a little side note, but buying equipment at the end of the year, it can give you a tax deduction. And we saw with the amazing amounts of bonus depreciation up to 100%, there's a lot of equipment and vehicles that qualified for that. And so you got a substantial tax write-off for a lot of things like that at the end of the year. And so it benefited a lot of people. But I'm always going to try to balance my tax advice with good financial advice. And what I mean by that is I'm not going to say go buy a vehicle when you don't have the financial, it doesn't make any sense financially. So in the situation that I experienced recently, a client came to me, new client that I hadn't worked with before, and that was kind of the default strategy was let's go buy a vehicle, and could work just fine. But he was also telling me that, well, I don't really want to spend the money on a down payment, and I don't want to have a monthly payment for a vehicle. I don't want a vehicle loan. And I just don't know if I have the financial flexibility for that, et cetera, et cetera. And so, me being his tax professional and tax advisor, it would have been a disservice to him to say, yep, go buy that truck and just kind of suck it up when it comes to the down payment and the monthly payments. That would have been bad financial planning or financial advice. And so, I want to always balance tax mitigation strategies with whether or not it's a good financial decision for you and your company. So, when we're talking about this, I want to stress that tax planning utilizes things that are legal. These are court tested strategies. They're IRS approved. They're not just some random things that we thought of that are going to be like, well, let's try it out. Especially when we're dealing with clients. Like, this is your life, your finances, your business. And we want to make sure that every strategy that we suggest for you in a tax planning engagement is going to be legitimate. We're not doing anything that is outside of tax code. And I want to stress that in the beginning of this show because there are some tax professionals who are not so careful with the law and how it applies. And I think it's really important as an ethical person and as someone who cares about the law, let's follow it and let's see what's there and work within the boundaries that are already written. So, the common American taxpayer kind of mentality is this: we're going to earn money, we're going to pay taxes, and we're going to spend or save whatever's left over. Kind of across the board, it's been that way. It is what it is. Tax planning and the way that I approach taxes kind of flips that around a little bit to say money. Spend and save your money in tax smart ways, and then pay taxes on what's left over. And by switching those two bottom things around, you really get to the point that you're able to go back to that proactive planning. You're writing your story ahead of time. You're spending money on things that you're already spending, just doing it in tax smart ways. Comprehensive tax planning looks at every part of your life and your business and your family and your lifestyle, and looks at the IRS code and various strategies to determine how best to apply it to your specific situation. Basically are looking for ways to structure things. We're looking for missed deductions. We're looking how we can apply loopholes, et cetera, et cetera. So do you have a kid that works in your business already? Well, let's hire them in your business, pay them a fair wage, get a tax deduction. That's a really simple one. And I'm sure we'll have an episode in the future on how all the mechanics of that work. But do you want to save for retirement, but you're self-employed? You don't know how to do that. Well, let's get you your own 401k plan. Let's get you being able to contribute to that and your business being able to contribute to that. Save for retirement and get a tax deduction for it. Do you earn income in a sole proprietorship and you're paying tons of self-employment taxes? Well, let's look at that and see if we can structure it differently. Maybe you'd be better off as an S corporation, or maybe we can combine various sorts of revenue into one entity and get you to a point that an S corporation does make sense where it doesn't now. Do you have a swimming pool? Maybe we can write that off. But really, the last one only applies very specifically in very specific situations, but it can apply. And that's the point that I really want to bring up is there's creativity. There is room for every client's individuality and what they're looking for, their plans, their goals, and their futures that we're trying to take into consideration when looking and doing comprehensive tax planning. So as we continue on through various episodes, I want you to know that we'll talk about strategies. Sometimes those kind of off the wall ones, like writing off your swimming pool, we'll talk about it, but it's not going to apply to the vast number of people. And when it does apply, it has to be done a very specific way. And we'll talk about when you can hire your kids in your business and when it makes sense to do so from a tax perspective. And when maybe writing off your vehicle or buying a vehicle and writing it off is the only way to go for a tax deduction. So as we end, I kind of want to just give you a sneak peek of what's coming with the Untaxables. And I know this episode was intended to kind of just be a short introduction to some of these concepts and philosophical leanings of myself as the one doing the podcast. And then from here, kind of where we're going is going to be varied. I don't like to get stuck in a rut and just do the same thing all the time. So we're going to keep it interesting. We're going to talk about various tax strategies. So we might take an episode and really dig deep into a specific strategy, who it applies to, how it applies, what other strategies you might be able to layer on top of it, that kind of thing. But we're also going to have episodes of client testimonials and how we applied real strategies to real clients and had real outcomes in their tax balances. Coming up really soon, I will be doing some episodes on the One Big Beautiful Bill and some of the provisions that are in there and changes you can expect this coming year. And then finally, we're going to be having episodes where we take listener questions and we'll be able to kind of plan out together what strategies might work based on listener questions. So with all that being said, I just want to say thank you. Thank you for being along on this journey. Thank you for trusting me as I provide you tax advice. And most importantly, I want you to know that I want you to be so successful. I want you to lower that tax bill. I want you to find the things in your life that are untaxable. And let's get you to that lower tax bill, keeping more of your hard-earned dollars in your own pockets and send less to Uncle Sam as much as we possibly can. Thanks for tuning in to the Untaxables. Be sure to like and follow our show and tune in again next week for more tax tips that keep your hard-earned dollars in your own pockets instead of sending them off to Uncle Sam. Until next time, get smart, get strategic, get untaxable.